So Bitcoin has been incredibly volatile recently. We have seen Bitcoin's price drop below $40,000 as we started to see a little bit of turbulence with BTC. It didn't last very long before we saw a bit of a push to the upside, breaking back above $42,000 Bitcoin. Now, with Bitcoin being so volatile, we are going to see a lot more in the way of price volatility over the next couple of weeks. Let's roll that intro and get right down into today's video. So with Bitcoin's most recent volatility dropping down lower than $40,000, climbing back up above $42,000, we've seen a lot of liquidations for Bitcoin shorts and Bitcoin long positions. Now, obviously this is something that I was talking about a week ago, where my expectation was that we were to see a lot more volatility with BTC, liquidating both the longs and the shorts, as there's a lot of liquidity grabbing occurring. Now, Bitcoin's price action did drop down to $38,500. This is a key number because it was the area that we were expecting a bit of bounce to the upside, ultimately between $37,000 and $38,000 Bitcoin. Now, at that time, when I made those predictions, I was expecting Bitcoin to move up more towards $45,000. And although we've climbed up again back above 42K Bitcoin, the expectation of 45,000 BTC becomes a little bit troublesome. I think we're going to be now kind of finding heavy resistance around $43,000 to $44,000. This is another key area of resistance and something that I think is likely to kind of hinder Bitcoin's price action to the upside. So do kind of trade with caution, as we are to expect, at least in my opinion, some more volatility and some more liquidity being grabbed out of the market. Now, it's hard to talk about Bitcoin's volatility without, of course, discussing the reasons behind what is going on. Now, as many of you guys are probably already aware, Grayscale have been taking profits. Now, taking profits on Bitcoin is something that we are an advocate for, and something that we can see happening at an institutional level at the moment. Now, Grayscale are basically taking a lot of liquidity out of the market, and these are not small numbers. Most recently, we've seen another $440 million of Bitcoin being transferred to centralized exchanges, ready for liquidations. This is going to fuel an even further move to the downside. Now, it might not happen right away, but it is something that we need to be aware of and need to be concerned with. But the bad news doesn't stop there either. Unfortunately, we've also seen the US government looking to liquidate their Bitcoin holdings as well. This is not as much as the Bitcoin that is held by Grayscale, but it is still a significant amount that is going to fuel the moves to the downside. And this is, of course, all about imbalancing the supply and demand. Basically, there is more Bitcoin right now available to be purchased than the demand can handle. And so this is going to create a huge problem for retail investors. And so that brings us another problem: retail investors. Now, as we know, a lot of 2023 has been fueled by accumulation from retail investors. We've seen wallets that hold over 1 Bitcoin grow quite exponentially during 2023. Even smaller wallets with 10% of a Bitcoin or even 1% of a Bitcoin were growing absolutely at astounding rates during 2023. Now, that purchasing power had to come from somewhere. So whilst retail investors were buying, we did see larger institutional level investors actually liquidating their assets, using 2023 to basically become their exit liquidity, and for them to exit their positions and retail investors to be buying at premium prices. Now, we know that Bitcoin's volatility has a few issues with it, specifically around that retail investor level. For example, we know that most of the Bitcoin was heavily accumulated in 2023 at around $30,000. This is going to be that pivot point for many retail investors to potentially lock in any potential gains or come out at cost neutral. This is going to be an area that a lot of institutional level investors already know and are potentially aiming at dragging Bitcoin's price down towards. So with retail investors heavily accumulating in 2023, I wouldn't be surprised if we were to see 30% of retail investors liquidating their assets. Now, to put some context to that, that is approximately 3.5 million BTC that could flood the market. It's a pretty significant amount and could fuel an even deeper correction for BTC. Now, Bitcoin, as I have been predicting about for quite some time, could be heading down towards $30,000. A lot of retail investors did not think that we'll be dropping down lower than 40K. However, I think given all of the things that are currently unfolding, our prediction of $30,000 is now highly probable. Now, can we hold $30,000 BTC? This is the question that I think a lot of retail investors are now looking at. 30,000 is the next kind of major pit stop for Bitcoin, where we are likely to see a significant surge to the upside. However, if we were to lose $30,000, there is a CME gap at $20,000 to $21,000. Something that I've been talking about probably 6 to 8 months ago, and something that we haven't really taken off the table just yet. Now, that is a real key area and a real big concern for retail investors who were heavily accumulating Bitcoin in 2023, believing that they were in a bullish market and were never likely to see these kind of numbers again. It's also a key area for institutional level investors who are looking to buy up cheaper Bitcoin, and basically at the consequence and at the cost of retail investors. Ultimately, they were selling large amounts of BTC in 2023, all around kind of $30,000 to $35,000, and they will be looking to accumulate, in my opinion, at lower prices. So if we were to see 30% of retail investors liquidating their assets, we could see something even greater than what Grayscale are currently doing to the market, with significant amounts of BTC entering the ecosystem or entering the market, dragging and fueling a price move to the downside that a lot of retail investors simply thought was never possible. And so to kind of summarize, I am expecting a significant drop in BTC, but not before we can first of all liquidate some of those short positions that have been kind of layering in over the last few days. Ultimately, like I said many times before, and ultimately one of my true beliefs is that institutional level investors, market makers, and exchanges are all liquidity grabbing at the moment. A key indication that there is a lack of demand in the market. Something else that we've discussed time and time again when we check the volumes coming in from a spot point of view. They're very, very low. Ultimately, spot volumes are an indication that there is not really a significant demand for Bitcoin at the moment. So profits are being taken off the table from the likes of Grayscale. We're also seeing, and you can argue, that the US government are taking their profits off the table as well. And we are likely to see, in my opinion, a significant surge to the downside with fear creeping in at the retail layer. Ultimately, retail investors, I think, are likely to sell their Bitcoin as times get harder and harder. At least 30% of BTC wallets holding less than 1 Bitcoin, I think, are likely to reduce down quite significantly. This reduction is going to see about 3.5 million BTC enter into the marketplace that is going to fuel and drag the price action of Bitcoin even lower. The question I have for you guys is, how low do you think Bitcoin is going to go? Why don't you check that out in the comments down below. Let me know what your thoughts are on how low you think Bitcoin can go, and why not check out this video here where we discuss what is going on with Polygon's Matic.